This is John Stark, Centaurus Financial. It is Friday, November the 20th, and we included near the last full week of November, and the market had a little selling spell today. It was down a little bit less than 1%, down at 219 points. The broad market across the board, the S&P 500 and other indexes were down too. That being said, we had a lot of news today, mostly related to the virus situation. So we had Pfizer apply for immediate emergency use of it and to have it for FDA approval. And so there are things popping up on that, but this is going to be a bad weekend, evidently, for the people testing positive with the virus. And that's going to meet a lot of pressure on businesses that have closed up because of the various municipalities asking them to close or close early. And that's putting pressure on the economy. And that's one reason why the market was probably anticipating a bad weekend, and that's why it sold off this afternoon. But at any rate, next week is again a shortened week because of the fact it is Thanksgiving week. So next Thursday market will be closed, but we'll be open again next Friday, and that will conclude just about all the rest of for November, which again has been a very positive month overall, even up until the recent selling spree. Related to the market is it has been a good year for many people in a number of investments, and they say this is a good year for the market. I got profits. How do I protect my profits? And this is a quick lesson on what if you own equities, individual stocks, and you want to sell, you want to be able to protect that profit you got in it. And this is what we talked about, the stop loss. And the stop loss is an order where you actually have a stock, and it could be XYZ Corporation, and it's trading at $100 a share, and it's done really well for you, and you've got a good profit this year, but you're worried about it may go down. So you watch it. You don't have time to watch it every minute like people who are active traders, but you want to make sure if it goes down in a hard day, you like to be able to lock the profits in. So say like you said so you might say I'm setting a 5% stop loss order. In other words, 5% of 100 is $5. So you'll say a stop loss at 95. And so during the day or during any time that the market hits down, as long as that order stays open, and you can, when you place the order, you can make it good for the day, or good for the week, or good to canceled. But as long as that order stays open, if that stock hits 95, you will be sold out. In other words, the profit will be locked in, and it's sold out at 95. That way, if the stock keeps going down, it automatically sold you out at 95. This is a strategy that many investors use because it takes the emotion out of the game of should I sell, should I hold on. They just say I have a set parameters I want to have. I've got a profit in this, and many people have a set where they'll say I had a 40% profit in this stock this year or 20% profit in stock. I want to lock it in, so they set their stop loss order roughly at those levels. That is the stop loss order, and it's accepted in all stocks on the New York Stock Exchange. And related to that, so the bottom line, if you want to lock your profits in, it's called a stop loss, and you can do it anytime you want. And again, it will be executed the minute that price that you set as the loss will be executed, because the next trade, once it hits that, the next trade will be sold. That being said, if on the reverse side is if you have your eye on a stock that's been going up, but you don't know whether to buy yet, you might put what it call is a buy stop, and that works the opposite way. Is that the stock is you watching it going up, and usually I say, hey, look, I watch the stock go up from 90 to 100, and I don't know how much it was, but if it keeps going, so you might say a buy stop at 102, and when if the stock's trading 101, but when it hits 102, the next trigger, the next trigger will be a purchase, and you'll buy the stock at the next purchase on the next trade. So the bottom line is a buy stop works the inverse of a stop loss. It is a way to maybe buy a stock that's been trending upwards, and you want to may say, well, this is a way to step in on it. If it keeps trending up, I'm going to step in and buy. A lot of very active traders do that. That's a regular situation where a lot of active traders do it who trade regularly. A lot of option traders do that, and that's another strategy you might want to consider. But the stop loss is probably one that is most familiar with people this time of year, because they may want to get their stock sold, lock in the profits they got for the year, and utilize a stop loss. Well, anyway, that's basically how a stop loss works and a buy stop works. And there are just some techniques you can use to lock in automatic transactions to lock in your profits, or maybe make a purchase. Again, it's John Stark, Centaurus Financial. Please feel free to call me direct at any time, or email me at jstarke@cfiemail.com, or directly call me, or go to my website at johnstark.com. I look forward to seeing you next week.